with us, Mr. S Ramesh is the MD and CEO at Kotak Mahindra Capital Company to discuss this and more. Thanks so much for taking time out, because it's not just the IPO rush, but the fact that off late we've seen a lot of promoter blocks as well taking place. I just wanted to get in your overall take on the same. Are you seeing a trend of that picking up now or waning off, and how do you believe the street should be reading into that, the promoter blocks?
So, first of all, let me start by saying that in general, India Inc. and the financial sponsors are pretty active in the supermarket of deal making of all types, debt, equity, and M&A. You specifically asked about sell down by promoters. I would say that in general, sell down by the financial sponsors have been quite active in the last 12 to 18 months. But when it comes to promoters, I think it's more concentrated. Maybe these promoters have reasons of deleveraging or other reasons why. But as a trend, we don't see in recent times, or as we gaze into the future, any specific action around promoter sell downs in specific.
Okay, fair enough. I also wanted to get in your take then on the fact that we've seen a lot of action returning into the IPO markets. There's been a plethora of IPOs day after day practically. What do you believe that this is indicative of? And do you think that this is likely to be a trend that will last perhaps till the end of the year, or is only likely to pick up?
So let me warn you, I'm going to give you a little long-winded answer, but maybe I'll start with the preamble that we are witnessing a pretty active primary market. But having said that, I would say that we are witnessing the syndrome of rising tides raise all boats. So we are actually seeing old pipeline which could not get successfully earlier, etc., getting cleared in recent times. So this is one characteristic. The second characteristic, which is a little unusual, is it's been dominated by the industrial sector as opposed to healthcare or financials of the past. Third, the average sizes of these IPOs, which you have seen in the last few months have been quite small compared to what we saw in calendar 21 and 22. That's understandable, because if you were to just rewind back to 22, we didn't see a very active primary market. So I don't think issuers will, by and large, getting prepared to file prospectuses for a launch in 23. And therefore, you have only seen 3 offerings or 4 offerings of larger size. But I think there's more to come. And I think the general exuberance that you will see in a primary market, I expect it to get better after elections of next year. And the other thing that we are witnessing is there are some very good conversations going around on listing of new age tech companies, which I think you'll see a very active window post the elections. And the other good thing about this run in primary markets is most IPOs have listed well, which is good for investors, and we should wait and watch how sustainable they are. I do think that totally there is close to an $8 billion of pipeline, both SEBI cleared and which are filed. And I expect the market to be good, not exuberant, but more dominated by smaller deals, with the exception of a few large deals that may hit the market. But after elections, one should expect to see a more robust primary market.
As one is already. But Ramesh, I mean, not just Mainboard IPOs, but SME IPOs as well are picking up, right? Even as SEBI is putting SME companies in ASM, which may not impact the IPOs. What's your take here?
See, I would confess that we don't track the SME platform. So maybe I'll skip this. I don't think I'm on top of what's happening in this segment.
Not a problem. But what is your reading of the overall M&A landscape? Because that also has been seeing some heightened activity. So wanted to understand which sectors do you think that activity is going to only get upped when it comes to M&A at large?
So I think India is in the middle of pretty active deal making in the M&A space. A lot of India Inc. and large private financial sponsors are very active. If you saw the last few months, you actually saw deals announced in Route Mobile. You saw Bupa's acquisition in Niva Bupa. You saw Bearings getting pretty active in HDFC Credila. You saw the announcement on the Glenmark deal by Nirma. So it's very active deal making. 2-3 trends which are very heartening to see. we are starting to see green shoots in some sectors of the re-emergence of the strategic investor, which was missing time post the COVID. The second thing is we are continuing to see domestic companies, dominating the acquisition space, and financial sponsors are really on the prowl. They have capital. They're looking for doing deals. So around the themes of deleveraging, either generation change, a better allocation of capital, and all these reasons, we're actually witnessing a pretty strong M&A environment, and we expect deal making to continue. And you must sharply contrast this to what's happening to other parts of the world.
Right. The other thing I also wanted to talk about, Ramesh, was the overall landscape for capital markets right now. Of course, with news of the bond inclusion, etc., one is likely to see more flows, but there are a lot of events as well which could have a binary implication, as one of the brokerages rightly said this morning, for the capital markets. You've got all the policy action coming in. We've seen what's happening with the US bond yields as well. And then, of course, the big one which is impending, which is the elections.
So I'll divide the answer into two parts. I'll make a statement or two about general markets, what are markets focused or concerned about. I think when you talk about India, you cannot escape the topic of expensive valuations. In general, investors find that valuations are expensive. Small cap, mid cap, they start to get expensive every time. So this is on the back of growth and expanding margins. But one is expensive valuations. Secondly, I would just put a small caution around geopolitical and oil particularly for the short term to medium term, and hopefully we'll see better correction. And when it comes to primary markets, and you talked about markets, because I'll just like to leave a line for the retail investors in specific. The Indian primary markets is largely predicated on a fantastic regulatory environment and institutional support, right? You always have themes where institutions tend to drive pricing of IPOs. They decide which IPOs are good. So I think as long as that architecture continues, by and large, we will see a reasonably healthy, accident-free primary markets. And I expect that to continue. But I would request the retail investors not to get carried away, because they are making returns today. They have to be careful and choosy. As they see a large number of IPOs come to the market, they have to select their bets carefully.
It's been interesting. Thanks so much for joining in and giving us some insights into the promoter blocks, the IPO markets, as well as what you're looking at the overall environment there.